Welcome to the third quarter Wespath Investments webinar. My name is Joe Halwax, Senior Managing Director here at Wespath, coming to you from our office in Glenview, Illinois. In this quarter's webinar, we have a segment with our CEO, Andy Hendren, interviewing Johara Farhadieh, our Chief Investment Officer, about her time here as Chief Investment Officer and her plans for the investment team and our funds in the future. Andy also interviews Eileen, Kane, our CFO of over 30 years, who's retiring at the end of the year, about her time here and her service to both Wespath and the United Methodist Church. We'll be discussing the Sustainable Investment Report, and you can see the QR code to the Sustainable Investment Report here. My colleague Karen Manczko and I will be discussing the economy, markets, Wespath funds, and an outlook for Q4 and for 2026. As a reminder, we also released our investor letter, and you can see the investor letter QR code here. And if you're interested in being on our distribution, please let us know. As always, thank you again for your partnership. Thank you for allowing us to steward your assets and support your mission. And with that, let's get on to the webinar. Welcome to the Markets and Performance section. I'm Joe Halwax, Senior Managing Director here at Wespath, with my colleague Karen Manczko. And today we're going to talk about the economy, about markets, about Wespath fund performance, and a little bit of an outlook for Q4 and into 2026. So Karen, welcome. Welcome to our new table, our new studio.
Thank you, Joe.
And I see you didn't wear a Illini orange today.
I did. I wore my usual black attire.
Well, let's talk a little bit about the economy, and let's think about the economy in terms of, say, headwinds and tailwinds. So why don't you start? Can you give us some of the headwinds that we're looking at in the economy right now?
There's definitely some headwinds. And I just want to point out that for most of my section, you're going to hear a lot about inflation and also slowing job growth. So some of the headwinds that I'm going to be covering is, first and foremost, policy uncertainty and government shutdown. This could impact investor sentiment. We could see an impact in the markets because of it. Also, as I mentioned, labor market weakness. We've seen job growth slow, which could raise concerns about economic momentum and ongoing economic momentum, along with inflation. Inflation's been shown to be a little bit sticky, especially in the housing. We know this is one of the things that the Fed is going to be monitoring as they determine if they're going to be increasing or decreasing or rates remaining the same. And then the final one I'm going to point out is the tech and AI theme. Technology and artificial intelligence continues to remain a headline in the U.S. market specifically, as we've seen these valuations trading at an all-time high. So if the market loses confidence in technology and artificial intelligence, this could have an impact on the markets. Also, we're seeing that a lot of these technology companies has a greater concentration in indices like the S&P 500. So if we start seeing a pullback in some of these valuations and stock prices, this could have a greater impact on the market, specifically the U.S. market. But more on the positive side, what are some of the tailwinds?
Tailwinds are more fun to talk about, for sure. Fun. Before I get to that, I think of when you say inflation, I think of the phrase we're hearing is 3 is the new 2. So we're not going to get back to 2%. So 3% maybe that what we're going to be, stay stuck with now for the foreseeable future. But tailwinds, I've got 2, and I think we probably don't talk about them enough, but they're pretty large. And one is when we look at financial conditions. And by financial conditions, I mean the state of say credit in lending, credit spreads in monetary policy. And there's 2 indexes that a finance professor at the University of Illinois points out to. There's the Chicago Fed Financial Conditions Index and the Bloomberg Financial Conditions Index. And both are moving from the upper left to the bottom right, meaning that conditions remain quite loose. So quite loose, financial conditions are supportive for asset markets. And then the second one is the fiscal situation. And in the United States, we're running 6.5% deficits when we spend more than we take in. That's it's obviously a lot of money, and spending is good. But it's not just the United States. You've got increasingly global deficits were about 3% pre-COVID, and now they're running between 5 and 7, including places that have formerly been quite fiscally responsible, like Germany, and then also China. China's state capitalism model seems to be ramping up their level of fiscal stimulus. So those are 2 really big tailwinds that we see in the markets. So let's switch gears a bit. Let's talk about fixed income, and not Wespath yet, but fixed income broadly. What happened in Q3?
There's quite a few themes that impacted the bond market. First and foremost, the actions taken by the Federal Reserve, and also we've seen the U.S. dollar weakening relative to other currencies. So both of those things had an impact. But starting first with the Federal Reserve. So the Federal Reserve cut rates by 25 basis points on September 17th to a range bound of about 4 to 4.25. This was the first time in nearly a year that the Fed cut rates, which was really the response to slower growth, softer hiring, and also a modest uptick in unemployment. So essentially, these rate cuts were because the Fed sees the risk in the labor market outweighing the inflation risk that we are also seeing. Part of this rate cut also, what we saw was a steepening of the yield curve. So when they cut rates, it pushed yields on the lower end down, while yields on the longer end of the curve remained elevated, which could be due to inflation and also geopolitical risk. So all of this in the background, jumping to the fixed income markets and how they performed. So the U.S. aggregate bond index was up 2.03% in the third quarter, and year-to-date returned 6.1%. So a really strong return for fixed income. We saw Treasury index up 1.5% in the third quarter and up 5.36% year-to-date. Now, moving on to the two best performing bond asset classes. First, in the U.S., high-yield bonds, up 2.54% for the quarter and up a strong 7.22% year-to-date. And then finally, global bonds, I want to highlight. It returned modest in the third quarter, up about 0.84%, but posted a really strong 8.56% year-to-date. So emerging market debt and high yield bonds were the strongest performing fixed income sectors. Also, we saw investment grade credits and high yield spreads both at historically tight levels, which is really positive for fixed income assets. The good news is everything I said was a positive contributor to the Wespath fixed income portfolios. But let's shift gears. Let's talk a little bit about equities. Equities are more exciting in my mind. So what do you think?
Yeah, I get to talk about the everything rally in equities. But before I do that, I do think that when you talk about the yield curve steepening, that also goes back to one of those tailwinds. So rising deficits also think about might not be favored by the long end of the bond market. But you'll on to equities. So as Karen already mentioned, we saw positive markets in fixed income. We also had positive commodity markets, but then we also saw equities rally both U.S., international developed, and also emerging markets. So for the quarter, the S&P 500 gained 8.2%, which brings the year-to-date up to 14.8%. So now we're on the third year of double-digit gains. The international emerging markets are performing better. So on the quarter, the ACWI ex-US rose 6.9% and is up 26% year-to-date. So again, just about 11% more than U.S. markets. In emerging markets, outperformed on the quarter, up 10.6% on the quarter and up 27.5% for the year. And again, I think we know a lot. We talked about the weakness of the dollar. The dollar's down roughly 10%. It has stabilized, but is quite close to the level of outperformance that we're seeing from international markets and from emerging markets. So a couple of interesting things. And Karen, let me give you a question here. How much do you think the S&P 500 is up from the April 7th lows and Liberation Week?
Gosh, I'm not sure, Joe.
It's 38%. So just under 40% from those April, that volatile period that we had. Really also kind of shows us about market timing. Market timing is extremely difficult. But thinking about why we're seeing this rally again, why are we seeing this everything rally? We covered some of the tailwinds, but also you have earnings. So Wall Street expects earnings to rise about 7 to 8% this year, and this will be the 9th straight quarter of earnings per share rising. We have the mega cap concentration, which stayed high at 40%, but the earnings of those mega cap companies is coming in line. So again, we haven't seen that rollover yet, although we are seeing broader participation as evidenced by the international markets. But I'll give one little caveat that one of my favorite pundits wrote about, John Haybice at DGB Solutions. So since 2018, we're seeing increased levels of fragility, meaning 10 to 20% drawdowns. And the thought about this is that given all the fiscal monetary support, it's also adding to the volatility. So we used to see an event every 14 months, and now we're seeing them about every 7 months. So even since 2018, we've returned 20 or 14% annualized in the S&P 500. It is coming with a great deal of anxiety and volatility. So why don't we move on now and talk about Wespath specifically? So the fixed income funds, since you cover fixed income, can you cover the fixed income funds?
Yeah, happy to. So as I mentioned earlier, bonds performed quite well for the quarter and year to date, which primarily have been led by global and high yield bonds leading the pack. So for the third quarter, the fixed income fund returned 2.23% versus 2.03%. Things that we kind of mentioned, emerging market debt was the biggest contributor. The fund's overweight emerging market debt, followed by the fund's overweight to high yield bonds. So two of the main contributors to that outperformance relative to the benchmark. Also, the US dollar weakened, as Joe mentioned, and so that had some positive impact with the emerging market currencies that are part of the portfolio, specifically those of Latin America. The year-to-date results were pretty similar. The fund outperformed the benchmark by a little under 1 percentage point. And again, primarily for those reasons I stated earlier, which is the fund's overweight to high yield and the fund's overweight allocation to emerging market debt. The final, before moving back on over to equities, I do want to talk about our inflation protection fund. The fund returned, again, a positive 2.5% versus 2.26% for its custom benchmark. So it did outperform. Similar to the reasons for the fixed income fund, the fund's allocation to non-dollar bonds, specifically those of emerging market inflation-linked bonds, was the biggest contributor. Again, those currencies in Latin America and that allocation really helped provide those absolute and relative strong performance. Also, the fund has a 10% allocation to commodities, and the commodities manager outperformed its benchmark by 110 basis points, primarily due to the manager's overweight to strong sectors like precious metals and also livestock. And then year to date, just final note, the fund outperformed by 41 basis points relative to its benchmark. So what about the equities, Joe?
Yeah, let's talk equities. So the U.S. equity fund in Q3 returned about 6% and is now at 9.4% for 2025. So on the quarter, the U.S. equity fund was about 2% under the benchmark of the Russell 3000. And I don't like to sound, sometimes we sound like, like a broken record, but it's a lot of the same things really have been driving these markets. If you go back to November of 2022 with DeepSeek and the rise of AI, the rise of concentration has hurt Wespath and hurt many active fund managers. Only about 25% of active fund managers are beating the benchmark in the past 3 years. Our active manager performance was mixed. 3 out of 6 managers outperformed. And our 6.3% allocation to private markets hurt slightly because, again, when we think about private markets and the delay in reporting, there's always, when public markets are positive, that can be a detractor. On the international equity fund side, kind of boring. We're right in line with the benchmark for Q3. And year to date, the fund's up an impressive 22.6%. Now that is just over 2.5% below the benchmark of the MSCI equity ex-US. Couple things on that. So manager selection has contributed, or has negatively contributed slightly. We had 6 out of 8. They're slightly under the benchmark. And year to date, we've had a significant negative contributor was our alt exposure. Looking at alts in the international equity fund, if you go look at a longer term kind of view, which is what we really want to be looking at, the longer term numbers are quite good. However, in the past 3 years, we've seen a real lack of exits, which has really weighed on private markets. And then lastly, on the international side, we don't talk about it much, but there's been some headwinds in terms of exclusions. And if you think about what you're seeing is European defense companies, particularly with the pressure on Europe to spend more money from their NATO commitments. So let's think about closing this up, and let's look at the crystal ball for Q4 and for the rest into 2026. So why don't you tell us what we're looking at in the U.S., and then I'll cover international.
Okay. Well, I think for the U.S., we keep hearing, again, inflation, slowing growth. So I think the main risk that we could see domestically could be stagflation risk. So tariffs can lift prices while labor is softening. So this could create stagflation. And obviously, this is a metric that the Fed's going to be watching as it determines what to do throughout the rest of the year. Labor markets concerns, slowing job growth with stable wage inflation. Again, it's prompting the Federal Reserve to prioritize employment risk over that inflation control. Again, those two main themes that we are hearing. Also, we're expecting additional Fed rate cuts that are expected before year end. So the market's pricing in potentially a policy rate of 3.25% to 3.5% by early 2026, which should hopefully provide some positive bond and equity performance with that. But what about internationally, Joe?
I think we might want to mention we hope the government shutdown is over by the time we post.
The government shutdown is over.
But we'll just move on to some of the international. The dollar, right? So the dollar has been such a big primary driver of international performance in both stocks and bonds that we're obviously very looking at that in terms of into next year. Some of the headwinds into the dollar remain. So we would look for continued slightly lower dollar, some pressure on the dollar. European economies remain quite soft. In particular, Germany looks like it's about to step into recession again. Again, there could be some policy relief which could help, but there are some economic concerns about, say, Europe, whereas Asia probably looks a little bit better in terms of its economic growth. You mentioned tariffs. Obviously, tariffs, some of the negotiations we've had could change. Trade realignment, onshoring, right? The speed in which that happens. And then something else, I'll take a page of what you talked about AI and the level of AI and how much it impacts U.S. markets. You do have this global AI race, and particularly with China. Talks about DeepSeek having a product that's very similar to OpenAI at 10% of the cost. So, there are a lot of people that are looking at that and really wondering about the level of CapEx versus about the level of eventual revenue. So we'll be keeping an eye on the competition we have there with China.
Definitely lots to watch out for, both domestically and overseas, that we and our managers will be watching closely, and we'll provide you an update on. But, that concludes our performance and market update for the third quarter. As always, thank you so much for your trust and your partnership, and we look forward to seeing you all next quarter.
Welcome. My name is Andy Hendren. I'm CEO and General Secretary of Wespath, and I'm here with Johara Farhadieh, our Chief Investment Officer, who's been in that role for just over a year, and with Eileen Kane, our Chief Financial and Strategy Officer, who has been in that role for 7 or 8 years, but has been at Wespath for 38 years and will be retiring at the end of this year. Welcome, ladies.
Thank you.
So, Johara, I wanted to start out on a personal note of congratulations. Johara was recently named one of Pension and Investment Magazine's 2025 Influential Women in Institutional Investing. That recognition came just about at your 1-year mark as CIO at Wespath, and it's incredibly well-deserved. How would you describe your leadership style and how you've applied that here at Wespath in this first year?
Well, I want to start out by thanking you, Andy, and thanking you, Eileen, for your partnership and the award. It meant so much to myself, my family, my kids, and to my friends in the industry that sort of supported that effort. So thank you to both of you. And I can't believe it's been a year. It's truly been an honor to work with Wespath and the Wespath team, and so grateful for that. In terms of leadership style, I think we all sort of understood my leadership style as we got to know me. But really, it's been wonderful to be able to be more collaborative with the team and engage them to allow them to make decisions and empower them and hold them accountable for certain decisions. So we set up an investment committee where everyone has a vote on some of the big actions. Many of you know about the asset allocation committee that also gives input to the broader team, but just the way we do research, our investment process, manager selection, all of that is taken a more collaborative approach, but we really hold, the senior members of those teams accountable for making those decisions broadly and ensuring that we give our best to our clients. So for me, a collaborative approach, ensuring that we're effective, efficient, and really good stewards of our clients' capital is really probably the main leadership style. But you guys could tell me more about my leadership style.
Well, I've seen it in action, and what I think it's done is brought more creative and more challenging thinking to our investment philosophy, and it's future-proofed it. You've made it a replicable, durable process, and to me, that's a gift to our clients. So
thanks, Andy.
So Eileen, your leadership has taken us Wespath through many decades. You've undergone a lot of transformational work How is that? How does your leadership style and the core principles that you hold fit into all that history?
First, I do want to say congratulations. I think it was a very well-deserved honor, and it's been my privilege to work with you this last year to get to know you that much more. I do really think that while I bet most of our employees wouldn't necessarily see Johara and I as having similar leadership styles, there's a lot of what Johara has touched on that I would echo as well. I think collaboration is key. Collaboration across Wespath is something that we've embodied for a very long time. Surrounding ourselves with talent, those people that are going to challenge us, as well as push forward with the same level of commitment to our clients, has been a really important thing. I think, embodying John Wesley and doing all the good you can. Never losing sight of our end goal has been another really important piece for me. The end goal, certainly there's been pivoting throughout my career, being around so long, but really knowing that we're here to serve and to fulfill the missions of our clients, whether that be the clergy or the institutions, has been really important. And sometimes that's led me to be more comfortable in taking some courageous moves, I guess, and bringing others along in that. And then last but not least, I would say one of the big things in leadership has been, I worked for a leader. We worked for a leader that sometimes saw things in me before I even saw them myself. And I think I've tried to do that with my team in being someone that can help pull someone forward much more as we grow the organization.
Well, I agree with that. And Eileen, I credit you for seeing things in me that led me to this spot where I am today. So you've given a lot to Wespath. Eileen is one of the hardest working people I've ever known in my life. So, Johara, let's talk about engaging with our institutional investors.
Oh, sure.
Yeah. I know you've spent a lot of time engaging with them, getting to know them, understand their ministries, so you can be a better service provider to them. What's like a meaningful takeaway or story that you have from this first year of time with those clients?
Yeah, so it's been a pleasure to get to know both our institutional investors and our participants. And the more I get to know them, the better I'm able to understand how to really structure our investment products so that we continue to meet the needs of our clients. And for me personally, it's been a gift to spend time with clients because it's reaffirmed to me that I'm where I'm supposed to be in terms of being the CIO at Wespath. There were several moments in the last year where I actually took a moment to reflect on taking the leap of leaving an employer that I absolutely loved and then taking that risk to join the team here at Wespath. And some of those moments have been with our clients. One specifically was really around spending time revisiting their investment funds and how they're investing in their investment policy statement. And in doing some of that review, I was able to bring some of my experience directly to the client and share with them a little bit more about my experience working at nonprofits, whether it's the hospital that I'm on or the school board, that resonated exactly with that client. And it was like an aha moment for all of us once we did an asset allocation review that we realized that client could take on a little more risk, perhaps, to achieve a certain return while still being able to have liquidity for their distributions. So that moment really felt like there was an aha moment across the board between the client, the staff, and myself on how we continue to improve and be better investors. And then the second was spending time in Angola with you, Andy, and just seeing the impact that we have on clients across the globe and the ability to really ensure that we're taking care of those who serve and just knowing that we're representing everyday people that have given up a lot. And so the ability to make a difference every day, it's just not something that's lost on me. And I would say that that's the part that keeps me wanting to continue to be better and better every day.
That's great. And I certainly see that in you as you have deep relational skills and you have built a lot of goodwill and credibility for Wespath with our clients and showing them how much we care. So. Eileen, you've kind of seen the institutional investment business at Wespath from the ground up, from this nascent little support of some conference deposit accounts to what we are today. Maybe share an experience or two you've had with our institutional clients.
Yeah, it's been a phenomenal ride. I actually still remember pretty vividly being in Evanston and celebrating when we hit $3 billion in assets under management. I think that the things that stand out for me the most is recognizing that we were doing socially responsible investing or impact investing way before it was mainstream, right? We've had a history of positive social purpose lending and continuing to make impact, whether that be on our benefit side or even in the way that we deploy capital. And I'm really proud of the fact that the church has led that, and it hasn't been some, mainstream investment management firm that has done that. And I think I'm excited about some of the opportunities that Johara is leading to make that even more available to our clients in the future. I think the other thing would probably be the actual launch of Wespath Institutional Investments, WII. And frankly, Andy, some of your creativity. All of us at Wespath never want to have to say no to a customer. We were getting requests more and more as we did grow the business for how other institutions could get into this wonderful, socially responsible firm and all of the things we were doing there. And so that launch of WII, which has now been, 6 years in the making plus, has been a lot of grit, a lot of hard work, a lot of creativity, but a phenomenal, I think, solution to a business need that many clients are continuing to look to us to offer. And I'm excited about where it's going and what you guys are going to do with it. And I can't wait till you celebrate the next big milestone.
Oh, we're looking forward to celebrating milestones too. So I'm looking forward to celebrating you at the end of this year.
Yeah.
So you just described a lot of change. So kind of, Johara, what's your secret? What's your kind of approach to building trust and alignment when there is so much change happening?
Yeah, I would tell you, it's not a secret or a formula or anything. Really, I would tell you my number one approach is just being authentically myself and just putting it out there. I am pretty transparent and direct, and so sometimes it comes across where it can land perfectly and understood, and sometimes it needs a little softness around the edges. So as much as I want to tell you I have a perfect way of leading, but one thing I could always tell you is I'm going to tell you the truth, and I'm going to try and do it in a more direct and sort of candid way. And I think that is sort of my natural way of being. So if you need me to be different, I don't know how to do it. And also, though, I have to say I was really fortunate. One of the first things you do in being new is really assess your team. And I have a phenomenal team here. We've added some really great members, but I'm grateful for Frank Holstein, Raj Khan, Amy Bolger, and Quach, who's someone new, not necessarily anymore, but newer to the team. And so by having them in leadership positions, it's really just helped me continue to be able to get to know our clients and focus on our investment philosophy and products and things like that. So I think together it's really, we're fortunate to be working in an organization where there is a lot of inherent trust and kindness. And so to walk into something like this only makes my job easier. So in having leadership like you and others here, I think together you guys are kind of helping me bring it all forward. So,
oh, great, thanks. I have seen and experienced your directness firsthand.
Yes.
Keep on being you.
Okay,
That's all I
thank
can
you.
say.
Thank you.
So Eileen, as you mentioned, you've helped guide Wespath through denominational change, through internal organizational change. I know. What's your magic formula?
I don't know that there is one, frankly, and I think it certainly has evolved in all of those years. I would say bringing people along is probably number one, and thinking about change in the grand scheme of always considering the long term, but recognizing that in the short term there might be need for pivoting, right? I think have been some of the most critical things. Certainly I've been part of changes that have caused angst.
Yeah.
We always have a desire to make sure that we achieve the objectives of everyone. And I think eventually we get to some really solid points, but sometimes there's experimentation along the way. And I think relationships and trust that the two of you have built and are going to be critical to continue to have is what makes the big difference in ensuring that you can get the time you need to actually drive the change, because not all change is instantaneous. But I would say after living through some painful ones, all change is opportunity, and thinking of it that way is really important.
Yeah.
I think one of the things you just said about knowing when to pivot or persevere, I think that's one of the skills that you brought to this organization, at least in my time as working with you as a colleague and as your leader or manager, is that you bring some of the perspectives that need to be considered in, are we going down the right path or do we need to rethink? So thank you for doing that for so many years, for so many of us. So looking to the future a little bit, looking ahead, Johara, what are some of the priorities that you have on deck for Wespath, for the funds, and what excites you most about kind of our evolution in this institutional investing space?
Well, I feel like we spent a lot of this year sort of assessing a little bit and strategizing on what we want for the future. And the number one thing is continuing to provide our clients with what they need to meet their mission and goals. And that's really more choice. So I feel like any values aligned nonprofit out there or our current clients, we want to be able to provide them with investment options that make sense for their long-term strategies and needs. And so that's where I'll continue to focus, is expanding on our investment options. We recently, as of today, have launched the International Equity Index Fund, which is October 1st. So for those interested in that product, and then throughout the year, next year, we're going to continue to expand on our domestic equity and international equity offerings. Again, to create more choice and to build a little more customization for our clients based on what they've requested. And so continuing to build on our team and strengthen the team going forward. And of course, as always, continue to expand and grow our business on the WII side so that we can continue to offer excellent service for the long term.
Great. Thank you.
You're welcome.
So, in juxtaposition to that, although it's also future-oriented, Eileen, what advice would you offer to your successor, Jennifer Serving, our incoming CFO who started today, as you kind of ride off into the sunset? What would you leave her as key advice?
I guess I would start by saying you're surrounded by fantastic talent. You've got tremendous leadership support and solid thinking there. You've got a phenomenal board of directors, and you got a workforce that is really, really committed to caring for those who serve and fulfilling the missions of our clients. And so all those things put you in this wonderful sweet spot of being able to do finance in a really meaningful, missional way. I'd also say you got this. I think your experience coming with the experience on both the benefit side of the business as well as the investment management side is such a sweet spot for this organization. I couldn't be more excited about the search that you did, Andy, and the caliber of candidates that you considered, and that Jennifer is our person. I am thrilled for her to start. I am excited about her taking the reins, and you got this, Jennifer.
Pretty. Yes, she does. Well, we're really going to miss you, Eileen. I know we'll be able to celebrate for the next couple of months, and we're desperately hoping you transfer as much knowledge as you can to Jennifer on your way out. But what are you going to do day one, first day of retirement?
I don't know.
Sleep in?
I don't know if I can sleep in. And you all know me well enough. I'm one of those project people and list people. And so there's a part of me that thinks my husband might regret the fact that day one gives me more time to work with him on that list. But I think in the long term, I am looking forward to more relaxing, more spying, more traveling, more time with my family and things like that. But I'm also going to miss all of you. I know I'm going to lose my mind for the first couple of weeks, so bear with me if I start reaching out and interfering too much.
You could come back anytime, Eileen, anytime.
Well, it's incredibly well deserved.
Thank you. Thank you.
Welcome, webinar viewers. My name is Ryan McQueenie. I'm with the communications team here at Wespath. To my left, three of my colleagues on the investment management team. All the way down at the end there is Raj, our director of investment research, making his webinar debut in the middle. Thank you so much for joining us. Andrew, our senior investment analyst, and of course, our director of public markets, Quach, coming back to the table with us. Thank you all for being here this morning. We're going to talk about some exciting work you all have been up to over the past quarter and beyond that. October 1st, we launched a brand new fund for institutional investors, the International Equity Index Fund, I-Series IEIFI. Lunch on me if we can get through the whole webinar segment with getting all those letters in the row correctly. We've also have some exciting updates and a bunch of research and work that has gone into those updates for our balance fund, the multiple asset fund in the I-Series as well. and just getting a sense of all the research rigor and collaboration that went into the process for all of that work. So thank you all for joining me. And we're going to jump straight into IEIFI because it is the latest news on October 1st, our latest fund launch. Well, I'll stick with you because I know you were part of the development, fund construction, manager selection for that fund really since the beginning. What motivated Wespath to launch the International Equity Index Fund at this time?
Well, Ryan, I have to try to take on your challenge. IEIFI was launched at this time because, we're always trying to enhance our funds. And we want to be mindful of what our investors are looking for. And there's definitely been an increase in demand for, cost-effective, passive alternatives in the non-U.S. equity markets. If you look at our U.S. equity funds, we have passive options there. And we just weren't offering that on the international side for our clients, so it just made sense. So part of our investment philosophy is that we try to combine active and passive in a way that makes sense for our investors. And we didn't have that option for our clients on in the international side. We did that within our international equity fund, but this way having IEIFI allows our clients to do the same for their portfolios.
Great, thank you. I think that's a good overview of the fund and the rationale for it. As you hit on passively managed fund, it's also benchmarked to the MSCI World ex-US Index, so international developed stocks in the benchmark. And I think that's a good shift because you mentioned the alignment with our investment philosophy. And so, Andrew, I wanted to kick it over to you with that in mind. You were also close to a lot of the research and process that went into building IEFI. And I think that research and rigor is a really key part of our investment philosophy as well. How else would you say this fund reflects our investment philosophy in action?
Yeah, I think I do want to highlight that research component first, and then we can talk about the thoughtful blend of active and passive management that Wah just discussed as well. But one portion of our investment philosophy is this commitment to investment research. And we want to make sure that every decision that we make is supported by both research and data. So when we decided that we wanted to launch a passive option for International Equity Fund, we took a step back and did some research about what is the industry standard in terms of what exposure should this fund have. Through peer universe comparisons, data and investment, and understanding the opportunity set, we landed on that World ex-US benchmark. The second part of our investment philosophy and process that I think the launch of the fund highlights is the thoughtful blend of active and passive management. We believe that passive equity management, as Wah mentioned, is a cost-effective way to get equity market exposure for our investors. And with launching this fund, it complements the actively managed international equity funds and gives our investors a way to customize their international equity exposure, another key component of our investment philosophy. When we looked at this, research shows that active management is most effective in developed large and mid-cap equities, and active management is most effective in small caps and emerging markets.
So passive more effective in the large and mid-cap, which this benchmark and this index fund covers. Active management more effective in the spots that aren't in this benchmark.
Yes, and we as Wespath will be thoughtfully blending these two exposures within International Equity Fund as well, where IEIF will serve as the passive allocation to the fund.
Great, thank you for running us through that, Andrew. Raj, I think another theme here that's really important is choice, and Andrew mentioned that customization piece of it. This is now our third fund launch for institutional investors in the past year, actually less than a year. So I think we've shown a real commitment to adding to the breadth of our lineup of investment strategies that are available to the nonprofit organizations that we serve. You are, of course, the chair of our Client Asset Allocation Committee, which is responsible for helping clients take those different choices and boil it down into a unique portfolio that's really customized and tailored to their unique needs. How do you think about the role that IEIF can play in that process?
That's a very good question because not any two customers look alike. Their risk needs and return needs are very different. Their entire risk-return profile are different. And this is why we believe there's a role for active and passive both in a well-balanced portfolio. So what we do with this passive new fund, IEIFI, I think I got it right.
Nailed it.
Nailed it.
Okay. It's helping us bringing that cost-effective. Hoa mentioned, Andrew mentioned, that cost-effective way to get the beta exposure. That's important. And not every part of your portfolio needs to have that alpha extra boost. And IEIF can give you that cost-effective way to get the beta exposure, and it helps create that good combination. So I think that's really important, and we've already had the U.S. Equity Index Fund I Series as well. We already combined that with our active U.S. Equity Fund, and now we're doing that with the International Equity Index Fund I Series.
Good. Let me just make sure I'm getting a couple key terms there right.
Yeah.
Beta exposure is that market-wide
full
exposure,
market
market risk, and you said alpha as well, which is what
The
more
excess
commonly-
return over. So active management can go out and make good selection in their security choices. Through that and through that buy and sell, they're able to generate that little excess return over the beta, the market exposure. That's what's happening in the active funds. It's not happening in the passive fund in IEIFI. And a good combination of that can give you that good risk control. And we're doing that in our client-focused asset allocation decisions.
Love it. Thank you. I want to shift gears a little bit, and I'm going to stick with you, Raj. We're going to shift gears to the multiple asset fund, or MAF, as we sometimes refer to it. It's a balanced fund that invests in 4 different Wespath funds, so it has that fund-to-fund structure, and it has exposure to stocks, bonds, U.S., international markets. So it's a true global balanced fund for investors that are seeking that kind of portfolio. And we've got some updates, some work that's gone into enhancing that fund as well recently. Can you just run us through some of the highlights of the news we've been sharing about MAF recently?
Sure. And there are big changes, significant changes that I want to cover. So I'm glad you're covering that here. First of all, we are retaining the big mix of the balanced fund we've already had. It's a 65% equity, 35% fixed income. That's still there. However, how we have measured that in the past is changing. So there's a benchmark change. For that 65% equity, we are now selecting a MSCI All Country World Index as a representation for that.
The MSCI ACWI.
ACWI
Yes.
is the short version, yes. And I'm glad you're helping me with that because I would have kept tripping up.
Sure.
So MSCI ACWI Index, we believe, is a good representation of the entire opportunity set out there for the equity market.
Sure.
And so the 65% global equity component of MAF is now being proxied by this MSCI ACWI Index. Similarly, the 35% is the fixed income. The entire market agrees with the sentiment that a Bloomberg US Ag is a good representation for that. And we're bringing that. By bringing this 65% MSCI ACWI and 35% Bloomberg US Ag, we have now turned the benchmark into a little bit more standardized and easier to measure, well comparable in the market benchmark. However, that's not the only change. That's the benchmark change. There now is the more dynamic allocation changes that's happening in there. So as I mentioned earlier, the 65% equity component, previously what we had there was a 35% US component and a 30% international component. We are now changing that to be a little bit more dynamic and adaptive to the market changes. As we mentioned, MSCI ACWI is a good representation of the entire market. Well, we're looking at that benchmark and looking at how that's changing. If US and international keeps shifting over time, we now aim to shift with it. So it's a more dynamic approach to asset allocation. And I think it overall improves the fund. And I think it makes it more accountable with how we are managing this fund that represents the market better. And the benchmark is also doing a better job at reflecting what we're aiming to do with MAF-I.
Great. So I'm just going to one follow-up on there because
Sure.
I think we're getting into some policy and procedure, and that can be a little bit nuanced for folks. So just making sure we're bringing the viewers along with us here. The equity proportion that you just mentioned that being the target allocation process being tied a little bit closer to the MSCI equity. It doesn't necessarily mean the allocations are always going to mirror that of the MSCI equity, but now the process considers the makeup of the MSCI
Exactly,
in
exactly.
its allocation.
We are looking at MSCI ACWI makeup, which currently, I think closer to June, it was at 65% US, 35% international, and we're going to continue to look at it and over time adapt with it.
Sure.
We're not going to be able to adapt every day because markets swing up and down on a daily basis, and we want to keep an eye on it. And over time, our process now is to be a little bit more reflective of the market changes.
Okay, and I liked what you said earlier, dynamic, a little bit more dynamic, less tied to a static target. Okay, so there's a lot there, new benchmark, new process and procedure around how we arrive at a allocation for MAF. Well, when you take a step back and think about ultimately having a fund like that serve the needs of the nonprofit institutional investors that we're working with, how do you think about how these changes in MAF end up being beneficial to the type of clients we're working with?
Right. So, Ryan, one of the things that we took a step back and really tried to understand who our clients were in MAF, and they were these endowment foundations. And so, that really formed the basis for the allocations that Raj mentioned, that there's definitely more of a desire to be closer to market, to allow our managers to be the ones that provide the alpha that Raj talked about previously. So by just being a little bit closer benchmark, we focus on more that active manager selection that we have in our fund. And just to get back to that allocation and how being static is not serving the needs of our clients. Raj mentioned that the U.S. equity allocation, ACWI, is about 65%. Not that long ago, it was probably 50%. So, so if you just set your allocation to what it was, 15 years ago, you would be so out of, balance with the market.
Sure.
So that's one of the benefits, is just really making sure that we're close to the benchmark and really providing the return to our client from our active manager selection.
Okay.
And having just that framework and the rebalancing, it really does hold us more accountable. Raj mentioned the benchmarks that we changed to. Those are the more standard benchmarks that endowments and foundations use, so that we're measuring our performance versus what our clients are typically seeing and what they're using. So it really holds us accountable for the performance of our funds.
Okay, I like that. We talked about that a little bit earlier in the year when the fixed income fund adopted the Bloomberg US Ag as the new index, that it was a more standardized performance comparison. In other words, it makes it easier for other folks to judge us on how we're doing in those things like manager selection and the allocation process that you described. So I like that theme of accountability really coming through this year and some of the different fund enhancements and work that's gone into to what your team is up to. And Andrew, that's great segue over to the last question I wanted to ask you, which is really back to that process and philosophy, including our commitment to research and rigor. And you talked about how that applied to finding the benchmark, finding the manager, finding the strategy for the International Equity Index Fund earlier. Can you share a little bit more behind the curtain of our research process, the governance that goes into that, how these frameworks guide decisions like fund launches, updates, all the enhancements and work that we're talking about right now?
Of course, Ryan. When I think about Wespath making investment decisions, there are a few key areas that we want to make sure that we do. One is decisions supported by research and data. Two is that our decisions add value to our clients. And three, they align with our investment philosophy. And anytime that we make an investment decision, you talked about governance, it has to be approved by our internal investment committee. So taking a step back to research, Raj did not really talk about the amount of work that went into this MAF research.
Well, I only gave him a couple minutes.
I know, and he could have gone on for a long time, but he spent the first 6 months of this year developing this really in-depth research piece about what the most appropriate balanced approach is for institutional investors. And I think that really highlights the rigor and research that goes into our investment decisions. At the same time, within International Equity Index Fund, I-Series, I think I nailed that one, that was another result of our commitment to research in terms of going in depth on what the appropriate benchmark is.
Sure.
And I think as a result of that, we're allowing our clients to create greater flexibility and customization around their asset allocation, which is another key component of our investment philosophy. To sum it all up, though, everything that we do has to be recommended and approved by our internal investment committee after, in-depth discussion, debate, questions, going back and forth several times with that investment committee. And I think it really highlights the importance of the governance structure that we're putting around all the investment decisions that we make.
Sure, super collaborative. It's more than just you three or the folks
Correct.
some people see on the webinar more frequently. Like, there's a lot of folks that are going behind these decisions and are involved in it. So, cool. Well, thank you all so much for joining us on the Q3 webinar. It was really exciting updates for all of our investors, new stuff going on, new enhancements to existing funds. We appreciate you joining and talking us through it.
Thank you.
Thank you, Ryan.
Hi, I'm Ryan Nilsson. I'm a member of the communications team here at Wespath. I am pleased to be joined today by Sylvia and Lucas. They're directors. Sylvia is the director of our impact investment team, and Lucas is the director of our sustainable investment team.
Hey, Ryan.
Hey,
Hi, Ryan.
welcome. Thank you for being here to talk about the sustainable investment report with me. We have a great report that looks back on the work that your teams have done in 2023 and 2024. It also is I appreciate that it looks forward to 2025 in parts as well. And so we'll do both of those things. We'll look back on the great work that you guys have done, but also look forward on the work that's to come as well. The report itself touches on things like climate change, impact investing, human rights, and governance. Today, we're going to not only touch on those things, but also try to look at the big picture themes, the high level, take a step back sort of a thing. I think one of the things that stands out when you take a step back is Wespath's leadership and sustainable investing. We've talked a lot about things like the Net Zero Asset Owners Alliance. We've talked about your work engaging with oil and gas companies to help them with their methane reduction. Today I wanted to go in a new direction and talk a little bit about Nature Action 100. Lucas, can you tell us a little bit about what it is and our role in it?
Sure. So Nature Action 100 borrows some of the philosophy from Climate Action 100, which is one of the biggest investor coalitions on any topic globally, period, climate or not, and takes that kind of collaborative structure and applies it to biodiversity risk, looking at companies that either have a great impact on biodiversity or whose business model depends a lot on biodiversity. So we were one of the initial members of that group of investors, and one of the, I think, really cool things that we talk about in the new SIR, the Sustainable Investing Report, is our engagement with Packaging Corp of America. It's one of the biggest producers of cardboard and other pulp packaging in the world. They're based just a couple minutes drive from here in Illinois. And we started engaging with them along with a few other investors as part of the Nature Action 100 Coalition. And we attended their annual meeting in person. Their CEO invited us to speak to the whole investor body on that annual meeting call. And there's been some exciting things. Even yesterday, we were talking with their team about how we can bring some of those concerns about biodiversity risk to their board and their carbon neutrality team, which is a member of, it is made up of their senior staff and some board members.
It's very cool. Now, I heard you mention the term biodiversity, and when I think biodiversity, I think nature, but it might be a little bit more complicated or more nuanced than that. Can you explain what you mean?
Sure. So when I talk about biodiversity, I mean the protection of water, the protection of forests, and the protection of the agricultural land that our economy depends on.
Okay. You mentioned the work that you're doing right now with Nature Action 100. What are some other things that demonstrate kind of that leadership or in that leadership vein that we're working on right now?
Sure. So as we all know, we're living in pretty tumultuous times, and we've been a member of the Net Zero Asset Owner Alliance for a long time, and we play a leadership role when it comes to the governance there with our colleague Jake Barnett, and some of the thought leadership that's put out around, for example, expectations of companies in different sectors. Now, we've been a part of that organizing group, and we recently met our net zero targets, but that was kind of the easy work. Now we need to hit the next targets for 2030, and that's where these engagement with companies like in the cement sector or in the airline sector really gets important, because the easy stuff is already done. So to continue to exceed our interim targets on that net zero goal is going to require engagement across all sectors.
Thank you. Challenging but exciting work, I imagine. You mentioned Jake. Another colleague that I want to mention is Frank Holstein. And one of the things that Frank kind of hammers home is what is the financial impact of sustainable investing work and impact investing work. And I think, Sylvia, the PSP lending program, or the positive social purpose lending program, makes a real clear link to the financial performance. I think it's easy to see that. Can you just start by explaining what the PSP lending program is?
Sure, of course, Ryan. So our positive social purpose lending program is our only internally managed program here at Wespath, and it focuses on making investments in affordable housing and community development in the U.S. And then we also have a portion of investments in the microfinance space focused on developing markets. The program has been around for 35 years, so a long time. We've been really successful with the outcomes of the program. We have been able to make market rate investments and still make investments that have a measurable impact on both society, on the economy, on communities. So really successful on both sides of that. And we've actually highlighted a couple of these investments through PSP in the Sustainable Investment Report. And you'll really be able to see from these examples the true impact that it's had on different individuals, tenants, the community around these projects. So I would recommend checking those out and really seeing what we're able to do through the program.
You went with Johara to visit one of those properties in Broadview, Illinois. Do you want to share a little bit about that visit?
Sure. So Broadview Senior Apartments is one of the projects that is actually highlighted in the Sustainable Investment Report. I was able to take a trip down to that project with Johara, and it was a great way to get her immersed in the world of affordable housing and really show her, firsthand, be able to walk through the property. We were able to meet tenants there. We were able to meet the property manager there. And it really was a great example to show what our dollars can do once they're put to work.
Thank you. With Johara Farhadieh as the new CIO, can you give us a little bit of an idea of what you're working with Johara, what kind of the vision of the PSP program is going forward?
Going forward, I would say that if I were to just pick one word to describe what we envision for the future of PSP, it's growth. We've really focused on growing relationships with different intermediary groups so that we can grow the pipeline. Many of our investors have really expressed an interest in PSP and growing PSP and how do we access more of it. And so we really need to meet that demand. And by partnering up with these different groups, these different intermediaries, we're really able to provide that pipeline and that exposure. So that's what we envision for the next few years in terms of just growing that portfolio, also providing different ways for investors to access PSP. So that's another thing right around the corner that we're excited to talk about in the near future. So really good things happening through the program.
That's great. And I think PSP probably is like a full-time job in and of itself, but your team does more than PSP. One of the other things we've talked about a little bit is the impact measurement and management tool, or the IMM tool. I sat in on a meeting with your team with one of our asset managers, and I think they were really impressed by the work that John Streeter, who's on your team, has done with that IMM tool. They were asking for more details. They wanted to set up a meeting between members of that asset manager staff and John so he could educate them on the work he's done. Can you tell us a little bit more about that IMM tool that John's built?
Sure, and kudos to John Streeter because he's really done an exceptional job in building out this tool. But I will say it's also a great example of collaboration between teams here at Wespath. So my team and Lucas's team have really come together and been able to grow out this tool. So initially, when it came into fruition in terms of a project, the tool really focused on measuring our portfolio's performance and just assessing our portfolio in relation to the Sustainable Development Goals. Over the last few years with Lucas and his team, he and the team and John have really been able to expand on that tool to encompass a lot more sustainability focused measurements and information. And I'll let Lucas speak a little bit to that on some of the great work that you've done with John on that part.
Sure. So we have this IMM tool that speaks to things like contribution to affordable housing, hunger, climate, water. This started off as something that was helpful for reporting to clients, for example, but we've also found it really helpful in recent months as we've, under Johara's leadership, had a chance to evolve the way we're looking at asset managers. So we're using this now as part of our tool when we're looking at managers and doing our conviction model of whether we really believe in that investment philosophy, that particular manager that we hired to make those investment calls for us. We're looking at that now with that IMM tool to see, oh, maybe they're taking extra sustainability risk here that we're not comfortable with, or we know the big holdings that might have potential corruption risk that we can speak to those managers about to make sure that they're actually understanding that. And there's also some really cool work we're doing with Heartland Initiative, for example, which is one of our partners on the human rights and conflict affected areas side, of incorporating some of their more narrative analysis around controversies into that IMM tool as well.
And I would just add that with more and more information becoming available to us to use as part of the measurement, that tool has potential to really grow and really be effective in our communications with our managers and with our constituents and our investors. So we're really excited to see what the future brings on that part.
Thanks, Sylvia. And thank you, Lucas. The last thing that I was hoping to talk about, the last big picture trend, was kind of our ecumenical work, our partnerships. And I think, Lucas, the Interfaith Center on Corporate Responsibility is a great partner to touch on. Can you explain what ICCR is?
Sure. So ICCR, in many ways, was one of the founders of the sustainability, socially responsible investing, ESG, whatever acronym you want to use, movement. And that sprung out of the anti-apartheid movement decades ago. And now, in the current times we're in, I really see the faith investing world as an important bulwark when it comes to making sure that things like human rights, climate change are recognized not only because we're called to pay attention to those things, but because they're financially material, especially in the long term. So ICCR has been a great partner of Wespath. Our CIO, Johara, convened CIOs within this group recently. She's going to be speaking in person at their conference coming up in just a few weeks. And also they've been great partners with ICCR through groups like Marcy Investment Services and others when it came to engagements like with Dollar Tree and protecting worker rights there, with protecting shareholder rights at companies like Exxon. So ICCR is a really key partner of ours and one that we're excited to be a part of.
Great. Sylvia and Lucas, thank you so much. I just wanted to close out by noting one other feature about the Sustainable Investment Report. New this year is we're talking a lot about our investment process at Wespath and how our work on the sustainable investment team is kind of woven into that investment process. And you guys spoke to that with the IMM tool. So if you would like to learn anything about the investment process or anything else we talked about, you can scan the QR code that's on your screen now to learn more.